You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we've come to the end of the week. Yes, it is time to look back on a little bit of volatility. It is time for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling The Options Insider Radio Network. No matter how you're getting the show, whether you're joining us live, 1 p.m. Central, 2 p.m. Eastern, or enjoying it after the fact, as I know many of you do, make sure you listen, send in those questions, those comments. If you like what you hear, you can always go out there and help the flood of new listeners continue to discover the show, as they have been doing for many years. Now leave a review wherever you listen to the program. It always helps facilitate new people discovering the program. And again, get those questions, those comments, all that good stuff coming in. We do indeed love to hear from you guys. And joining me on the old Vol Views program today, first off, I'm pleased to say we're going all the way back out across the pond again this week. Just a week or so ago, he was right down the street. Yet we couldn't make the connection. But you know what? So we got time now. He's waking up. I think it's 1 a.m. over there, something crazy over there. He is our old friend, Mr. Simon Ho, the CEO over there at the T3 Index, beaming into us from the volatility mecca known as Sydney. Simon, welcome back to the program, sir.
Oh, look, thank you for having me. And sorry for the inadvertent snub at the FAA.
No, you were a busy fellow. I saw you, sir. You're doing an admirable job in the booth babe duty. I wasn't too much of a fan of the outfit the MIAX folks made you wear there, the booth babe outfit. But other than that, I think you did a good job, sir.
Thank you very much. Appreciate that.
Speaking of MIAX, we are also joined holding down the MIAX hot seat. It's been a little while since he's been on. Our old friend, Mr. John Smollen, the EVP and head of Exchange Traded Products and Strategic Relations, a.k.a. the longest business card in the game, Mr. John Smollen from MIAX. John, welcome back to the program, sir.
I'm happy to be here. You know, every time you use that title, it makes me one step closer to retiring, that's for sure. I just have John Smollen retired. It's very easy. How's that sound?
There we go. That's our goal here. We edge you closer to the...
No, that's my goal is to get Simon to help me get retired. We'll work with him. So.
There we go. Retirement for all here as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the program where we surprise, review what's been going on this week and indeed today from a volatility trading and trending and analysis and unusual activity and all those fun perspectives. And coming into the show here, kind of a weird mixed day after a mostly upside-oriented week, at least from an overall market perspective. Not so much from a vol perspective. We'll get to that in a little bit. It does seem like we came into this week with a little bit more optimism on the trade war front. There were signs of perhaps this détente we've been hoping for some time in the trade war would finally come to pass, and the markets really embraced that and ran with that earlier in the week. Coming into today now, maybe cooler, leveler, saner heads prevailing out there. Most of the major indices kind of unched to close out the week here. We've got the Dow Dow's down ever so slightly. S&P off a little bit as well. And then we've got NASDAQ up a little bit, but nothing huge. Certainly not the 1% plus or minus moves we've been seeing earlier here in the week. Gold and crude also taking a bit of a break after getting some interesting moves earlier in the week. If you like, of course, all that metals and commodity action, check out TWIFO. Just hitting the network, I think, as we speak. So check out that one. Not right now, of course, if you're listening live, but after this is done, you can go check out TWIFO. And, of course, all this kind of mixed action here to end the week means kind of a mixed week on the vol front as well. We actually have VIX cash pretty much almost exactly unched from where we were this time a week ago. We're at about exactly at 12.5. So a big whole whopping bunch of nothing there net on the week on the VIX front. And spikes actually a wee bit up from last week. It was at about a 13.5 on last show, which was great because that was actually a 13 double, which was my prediction pretty much exactly. So I bullseyed spikes last week, which was nice. So thanks for that, Simon. And then this week, it's at about a 13.70, 13.75, puts it up about a quarter from where it was this time last week. So let's go around the horn here and get everyone to chime in. Before we do that, John, I want to kick things off. I know you've been a little busy over there in the land of MIAX of late. So you don't have enough going on with spikes and with the forthcoming Viking and the futures and Pearl and Emerald and all the other stuff. You had to go out and add to the portfolio. You guys picked up the Bermuda Stock Exchange this week. Walk us through what was going on there, sir.
Yeah, absolutely. We were introduced to them several years back and have developed a good relationship over the time with the business team there and the leadership team and the board. And as we started working closer and closer together to figure out if there were things that we could do jointly, it just looked like, based on where they were, what they needed, and what they needed to do to get to the next level as determined by them, they needed to partner or join somebody. And we started the conversation about 2 years ago. And, Bermuda is a highly regulated and sophisticated place to do business, very safe place. And it's very important to the country and the premier down there that the reputation of the financial community be first and foremost. So we worked through that process, and we got to a point where we were able to acquire a majority ownership stake, and we closed on that on Wednesday, and we announced it, and it is now part of the MIAX family. Bermuda, traditionally, they chose to go into the insurance business over banking many years ago, so it is the hub of kind of the institutional product world. They also trade equities, a lot of debt products, and they've got their eye on the other products, including stuff that may develop eventually around cyber insurance. So for us, good people, solid leadership with a platform that has AML status with the United States, plus a thing called Reg S, which means they can list products that eventually over time can find their way into the United States through a listing process. So all in all, it was just a good fit for us and a great way for us to continue growing the MIAX company.
I think what was really behind this, of course, was you guys decided you didn't have enough exchanges HQ'd in exotic tropical locations. You had Miami already. Now you decided you needed to up that. You had to add Bermuda to the portfolio. Was that really the plan, John? You wanted to just tour more warm tropical climates?
You got me. You figured it out. An old trader saw right through my ruse. Yes, exactly. We're working our way through the Caribbean.
I wouldn't hold that against, particularly after you just partnered with the Minneapolis guys. So you needed to get a little bit more warm tropical weather there in the mix. Speaking of Minneapolis and the partnership, I was down, I mentioned at FIA last week, at the MJX booth, where I saw one Mr. Ho pretty much besieged by questioners about all things Viking, well, not Viking, that's coming up too, but the Spikes futures. In fact, I was talking to the MJX guys later. I said, what's it like for you old school grain guys to be deluged with all these volatility-oriented questions? They said it was kind of a nice, refreshing change of pace for them, even if it was outside of their wheelhouse a little bit. So, Simon, start us there. What was the response like from the crowd? I saw it myself, so I know it was pretty robust, but what was it like for you guys over there as you were kind of unveiling the Spikes future to the FIA crowd?
It was truly excellent, I'd have to say. I mean, I wasn't expecting sort of the extent of the positive feedback that we got, quite honestly. I mean, the MIAX team and I were actually in Chicago for 2 full weeks, so obviously we straddled the FIA, but we had individual meetings with so many market providers, market makers rather, and providers in general, as well as funds, and the reception was extremely good. And as you said, like I did catch you out of the corner of my eye when I was manning the booth, but I just couldn't get away.
That's when you immediately turned around and ran across the halls, as I recall. That's what happens. You said, I got to get out of here. I can't talk to that guy again.
Well, it could have been about Spikes, or it could have been about the free hats that we were giving away. I wasn't quite sure, but whatever it was, the turnout was good.
So it was a very fancy hat, sir.
I hope you got yourself a few. But, it was really good, I must say. A very good increase, lots of leads. It went very well. And in general, the whole thing through Chicago was very positive.
A 2-week sojourn to Chicago couldn't get you in the studio once. That shows just how in demand this guy is. But I know you've been traveling a lot, so maybe you haven't had a chance to parse the vol space too much. But what, if anything, sir, is coming across your radar in the vol land this week?
Yeah, so I think, for me, the last 3 weeks has been a little bit of a surprise because I suppose, we had Fed cuts, we had this whole China trade thing. I know it's been an ongoing saga for many months now, but I figured that my bias was that something would have to turn, and it hasn't been the case at all. It's interesting, though, that the market's obviously pricing some risk premium in. I mean, the shape of the term structure for VIX right now is, very, very steep. Well, it's not percentile steep, but you're talking a contango in the front contract of nearly 11%. So 11% if you just sit on it and it goes to the cash price. That's a very high carry. It has obviously been higher in the past, but for me that stands out to be the thing that where people are basically still saying, look, there is still some event risk priced into this thing. And who knows? I mean, I must say that it's been more sanguine than I had thought it would be.
Well, I have to say, I thought it would be exactly where it is right now because I was at a 12 double this week, and we're at about a 12.45 out there in VIX cash right now. So another week threatening a bullseye. I know who will take the other side of that because he did. We are joined right now by the greasiest of meatballs, Mr. Mark Sebastian, optionpit.com by way of Carmen Line Capital. Mr. Meatball, first off, welcome to the program. And then B, are you upset about potentially facing yet another exact bullseye from me 2 weeks in a row, sir?
What was your guess last week?
Oh, this week I'm at a 12 double right now, which is pretty close on VIXland.
Yeah, that's true. That is pretty close. Where's that Spikes index? Maybe I'm closer there.
No, you are. You're closer there, but you're not quite close enough. Spikes is at about 1375. So three quarters of a handle or so. It's not going to do it. Sir.
If you stealing my idea is produces wins for you, then I'm happy.
Yes, that's exactly how it all worked out. I point listeners to the tape. Luckily, we have it all on tape, so we have evidence. They can go check it out last week for themselves. They can determine who is thieving from who. But in the world of thieving, sir, and there's not a lot of thieving right now going on unless you're talking about vol, because people are stealing away some vol for the weekend here. What's catching your eye from a vol perspective, sir?
Yeah, I mean, it's pretty much the crush is on, and you got to wonder whether we're getting set up for an 11 handle sometime soon. I'm thinking, when was the last time we had an 11? It's got to be close to a year. I think we touched it in April. So we're looking at potentially the first 11 since April. So I think that those could be on the radar for next week as we head into potentially Thanksgiving and the bullishness that is the Thanksgiving holiday and expiration.
Yeah, let's keep on rolling here. Let's look at the futures out here. Kind of a beefy front portion of the curve, I suppose you can call it, out here with, like I said, the cash closing around that 12.5, 12 double level. We're seeing that NOV future almost exactly 2 points higher, so a nice hefty 2-point premium right around 14.5 or so in that NOV future. DEES a little bit north of 16, so that puts it off up north, near not quite 4 points, about 3.5, 3.6 points out there as well. So pretty beefy out there from a volatility futures perspective. Mr. Meatball, anything catching your eye out there in the term structure this week, sir?
It's really steep still. Has not given up much at all. And really they have not moved in a week. This is kind of one of the things we talk about, right? You'll get like structure wide enough and they won't move. And then all of a sudden you'll start seeing kind of the air come out of it. And, we're at a spot right now where term structure is staying extremely steep. As we speak right now, just looking at spikes itself, the spikes is what? The spike index, I've got, that kind of implied future is in the 14s, call it, I'm going to call it like 14.5, maybe 1480 for that November implied future. The December implied future is almost as high. It's higher. It's 1620. So you've got a lot of a really steep structure with, if you consider where the spike index is, that structure is really steep. Same thing in VIX. VIX future, VIX term structure. The VIX is around 1240, and that futures term structure is really steep. You've got over 2 points between November and the cash, and almost 4 points between December. So it is the steepest I've seen in a very, very, very long time, and presents some pretty interesting options trades.
It is interesting. Speaking of interesting, we've talked about it for a while. We've teased it. You were here in Chicago promoting it not too long ago. Of course, the upcoming launch of the Spikes Future. The plan, I think, is still for November 18th. John or Simon, we're closing in on that date, a mere 10 days away. It doesn't seem like it's been that long, but I guess we're closing in on it. Is that still the plan? Are we still on course for a NOV 18th launch date, provided all the regulatory stuff goes as planned?
This is John Smollen. My answer is yes. It's planned for the 18th.
That was eerily similar. I was confused for a second.
This is Meatball. I agree with John. Yeah.
It's like we got a ventriloquist
November
show
18th is where we're going.
It's all these eerily similar sound-alikes here on the program going to just confuse all of our listeners. And once we're talking spikes, let's get out there to the options. The OI, obviously, kind of in flux, waiting a bit for what's going on the futures front. 10 days, a mere 10 days away. All you guys writing in with questions about the futures, they shall be answered, hopefully, within not quite next episode, but the episode after that. We should have a lot of data and a lot more information on what's going on out there from a futures term structure position. Let's look at the options right now. Number one with the bullet still is that 1x2 kind of dominating the tape out there in spike options land. That DEES 2718 vertical, 26,000 on the DEES 27s for the number one spot. Number two, the DEES 18s, 13,055. A few extra piling in. In fact, I did notice a few retail folks piling into the spikes this week. Nice to see the smaller lots trickling in there as well, in addition to the 13,000 by 26,000 lots. Number 3, we've got the Nove 27s, 8,500 of those. Number 4, about 4,200 of the Nove 18s. And round out the top 5, we've got the Dees 26s over there. But it puts the total OI around 52,000. It's going to be interesting to see what happens with all that. When the futures are actually tangible, we can sink our teeth into them. Going on out to the VIX side of the fence. Let's do the top 10 positions out here in VIX options land as well. Number 10 cost you about $1.29 to get into the top 10 this week out here in VIX land. So pretty light, 129,000 of the Nove 25s. Number 9, 135,000 of the Nove 22s. Number 8, the Nove 18s, $1.36 open there. Number 7, the Nove 17s, $1.36 open there as well. So only a few hundred contracts separating those two. Number 6, we get to our first put on the list. It is the Dees 13 put, 152,000 contracts open there. Number 5, the $1.59 of the Nove 15 puts, our second put on the list. And number 4, our third and final put on the list, the Nove 14 puts, 188,000 of those bad boys there as well. Number 3, we jump up again over 200K, 214,000 of the Dees 21 calls. Number 2, about 223,000 of the Nove 20s. And number 1 with a bullet this week is the Nove 30s with a paltry 232,000. I mean, we've seen that number 1 spot in terms of open positions in VIXland get up to easily 400, 500, even 600,000. So kind of light out there on the overall top. Also kind of light in the OI, about 7.3 million contracts open, about 5.15 million on the calls, and about 2.15 million on the puts. Let's get out in some of the options business that was unfolding out here in VIX options land this week. Let's go backwards from the week. I like that. Let's go forwards, I really should say, starting in the back and then moving on forward. It gives a little bit more of a narrative of what unfolded out here over the week. One of the more active days. It was a pretty light week overall out there in VIX land. In fact, VIX OI coming off quite a bit, listeners, coming into showtime. It was a pretty light day today, about 125,000 contracts on the tape, and the ADV has now sunk well below 400,000, 371. It's down about 35,000 contracts from last show. So it seemed like it was fighting to stay over that 400K level, and then it kind of just fell off a cliff over this past week. Monday was one of the more interesting days out here this week because we had this funky, looks like a call fly going up. Looks like about 25,000 by 50,000 times. It was a Nove 18, 22, 25 call fly. Looks like the Nove 18 calls going up for 25,000 contracts, 2 blocks, 17,500 and 7,500. Both were 43 cents against 50,000 of the Nove 22s for 19 cents, and then another 25,000. So the kicker to the upside of the Nove 25s for 12 cents. Mr. Meatball, I'm sure you saw this one. Are you a fan of this Nove? 18, 22, 25 funky call fly, almost half the day's paper going up in this one print. This one catch your eye this week, sir?
Yeah, that is we don't, that's not as uncommon of a trade as you might think. And it's the trader really trying to structure the trade to accomplish, probably based on some underlying position, but taking advantage of where skew and curvature may work at the most to their advantage, and to develop a trade that costs as little as possible, and pulls in some really nice, really takes advantage of the structure of that skew curve. So basically, under normal circumstances, any other product like VIX, other than VIX, these type of trades are weird. In a VIX spikes world, these trades actually make a lot of sense.
You guys sling any flies like this in Carmen line, sir?
We did kind of a weird, funky, bearish one in Carmen line. Trying to take advantage of some of the wide term structure. But that we also did do a quote unquote funky fly or an off strike fly or whatever you want to call it.
How did I know that would be a go-to bit of strategery for you guys over there? Let's go to Tuesday now. Tuesday was a fairly active day out here. It looks like the big print, a couple of interesting prints. It was an April vertical, April 27.30, so pretty far out of the money vertical, going up about 9,000 times or so, and then looks like they did that for about 24 cents. And seems like they may have sold that one, which is kind of interesting. That is opening as well. And then they had also looks like a bit of a, I guess you can call it a funky risk reversal. Let's see if these prints are. Yeah, these prints are the 41,850 of the NOV 14 puts going up for 60 cents against the NOV 17 calls. Also 41,850 times for 68 cents. So they did that for a risk reversal, doing that for a whopping 8 cents, which is kind of interesting. Mr. Meatball, we talked about this before, these kind of risk reversals where the puts are pretty much meaty at this point. It's kind of almost more like a strangle now. Is this another one that caught your eye this week, sir? This funky NOV risk reversal / kind of strangle?
Yeah, there's been a lot of weird NOV trading around, but yeah, it essentially is a strangle at this point. And it didn't, believe it or not, this is not one that I was paying attention to. But it makes a lot of sense. There was a lot of NOV paper floating around, and Ds for that matter. So, so not surprising. Downside has really picked up the last couple of days and weeks. Tons and tons of NOV and Ds puts and put spreads and calendars trading.
Let's talk about some of those tons of Ds puts, because Wednesday was the day when a lot of them went up. Wednesday was one of the more active days of the week. I'm still not saying much, only about 340,000 contracts, so not a huge lighting up the tape day, but at least for VIX land. But some of the big prints out there, 40,000 of the aforementioned Ds puts going up 22 cents, Ds 13 puts, 38,000 of the Ds 14 puts going up 54 cents. It is worth noting that was a spread, so that was looks like a Ds 14, 13, maybe a bit of a strip out here, given the way that it went up here. By the way, a lot of love, a lot of action. About 80,000 contracts going up in these Ds 14 and 13 puts. Feb 14 puts also getting some love, 10,000 times there, as well as the Jan 14 puts. A lot of just out of the money puts was, let's see, that's 89, that's 100,000, 110,000 already of the 338,000 contract, 110,000 of them going up just in these big blocks of puts here alone, top of the tape. That's on Wednesday. On Thursday, a similar overall volume, about 368,000, the big print of the day. Looks like it was on the call side of the ledger, so mixing it up a little bit. A lot of late prints going up in VIX land these days. You got to get on your buddy Tubby, Mr. Meatball. All these late prints, they're making my job hard here. You know, it's hard enough as it is parsing this freaking fire hose of trading, but then have all these late prints going up. It just makes it that much more fun here. So we got nearly 27,000 of the NOV 20s going up for 23 cents. That's kind of near the offer, but again, it's late, so who the hell really knows at the end of the day. NOV 16's also going up 17,000 times there for about 70, close to 70 cents, and some big prints, Ds 20s, NOV 23s, Ds 22s, so kind of flipping the script. Again, that makes some sense given what we saw in the broad market from an action. So Wednesday was the put day. Thursday was the call day. Ds 22s, NOV 23s, Ds 20s all going up more than 10,000 times in big blocks. And today, like I said, kind of a light day, not even 150,000 contracts on the tape coming into showtime. Again, it's kind of the markets are kind of mixed, trying to figure out what the heck is going on, what we want to do, what we want to be when we grow up here in the marketplace. Everyone's still trying to digest all this trade war data. The big print coming up today, the Ds 23s for a whopping 65 cents, splitting the uprights exactly out there this week, as well as about almost 10,000 of the Ds 17s. Both of those, at least the latter there, the 17s, were opening about 10,000 times for $1.06. So again, kind of splitting those uprights pretty impressively. And NOV 27s. Also, it's like maybe a funky risk reversal. If this is the case, this is a very funky one. This stretches the definition of risk reversal, more of a time risk reversal maybe. It's 4,000 lot of the Ds 11 puts going up for a whopping 2 cents opening against the April double calls, 55 calls, also 4,000 times, doing that for 20 cents. That one right on smack on the bid. So it could be a funky time strangle maybe as well. Mr. Meatball, this one catch your eye, this weird funky April Ds one, and anything else outside of these trades, anything else coming across your radar this week from a VIX options perspective, sir? There was a
huge put spread that went up. The 14-13 put spread in November went up for 32 cents. Just absolute size up. We've also seen the November 13-12 go up, and there was a pretty big November December 15 put spread that went out. But the Nov 12-13 got bought for 20 cents customer, and a customer sold the 15 put spread at 22 cents. So there's definitely some true funkiness in a lot of these little puts, just because the curve is so steep. We dealt with a flat curve for so long. Now the curve is the steepest that I can really recall.
It's bringing a lot of funk to this put wing, that's for sure. That's probably why the Nov 14, 15, and 13 puts hold the number 4, 5, and 6 positions in the open interest right now, top 10 open interest, because not just that put fly. That put fly helps. That was 100,000 contracts right there. But still, a lot of paper, and of course, all these other put spreads making it up. Simon, I know you've been busy traveling hither and yon, so maybe you haven't had a chance to be glued to your VIX options screen. But any prints, any developments going on in VIX land this week, sir, that really caught your eye?
Not specifically. Unfortunately, as you say, I've sort of been away from the action over the past couple of weeks. I agree with Meatball's sentiment that I mentioned at the start of the show too that the term structure looks very, very steep. It is something that I think you could potentially take advantage of. I mean, if this is going to continue through here, maybe buying a sort of an at-the-money type put for January is something that I would look to do. It's quite steep at that portion of the curve, so that's the sort of thing I suppose that I would look at. I just don't think that the disparity between the cash and the futures is significant enough that I think that looks like a reasonably appetizing trade.
Uh-oh. When Simon says it's reasonably appetizing, that's pretty excited for him, so that means this might be something you want to check out. All right, let's move on to the product. I know it gets a lot of you guys excited to love it or hate it. Either way, you guys love to chime in about it. It's, of course, our old friend VXX, the ever-eroding product, continuing its erosion today down to about 1875 or so, so putting it south of that 19 handle. So we're well south of that 20 handle now. I know a lot of you were paying attention to that. Let's see what you guys have on out here from an overall OI perspective coming into the program here. Everybody loves themselves a little bit of the old VXX. Yeah, let's go. Number 10, the Jan 14 puts, so longer term puts still out there on the list, 29,000 of those. Number 9, Jan 22 calls, so flipping the script a little bit there, 29,000 of those as well. Number 8, also 29,000 of the Nov 60s. Those are optimistic, shall we say. Number 7, 31,000 of the D16 puts. Number 6, back to Jan. The Jan 22 puts, 34,000 open there. Number 5, back to Nov. Nov 19 puts, 40,000 there. Those seem like they have a good chance. And then they are looking good as we speak. Number 4, Nov 28s, more on the upside there, 40,000 as well. Pretty tight OI here this week. Number 3, the Dees 27s, our second Dees on the list and our first Dees call. 43,000 of those. Number 2 here, you got the Nov 18 puts, 44, almost 45,000. Number 1 with a bullet this week in VXX land, the Nov 35 calls. 46, almost 47,000 of those bad boys. Talked about those before. Those seem like they may be a bit of a bridge too far. We shall see. Of course, there still is time. A whole whopping week for the volatility space to melt down. Looking at what's going on out there today, looks like the big print, actually a pretty decent sized print for VXX. Doesn't usually see 23,000 contracts going up in one print. We got this about 11,500 of this Nov. Looks like a Nov roll, a Nov put roll. The Nov 18 puts going up for 11 cents versus 32 cents of the Nov 17 halves. Those are the expiring on the 29th, so the weekly. So it looks like selling out the Nov 18 puts and then rolling them out and down a little bit, rolling them out to the 29th and then down to the 17 half strike, doing that for 21 cents, 11,500 times. So giving himself a little bit more time and a little bit more downside here on the put side. Mr. Meatball, I know your crazies out there love themselves a little VXX. It's been working in their favor so far. What's been lighting up yours and their tapes out there in VXX this week, sir?
It really made a nice quick move down to 19 and then has essentially spun its wheels all week. going kind of up and down and up and down. I'm really interested. The low for the week is 1855. I'm really interested to see if the VIX futures and the VIX itself can push it lower. And thus, I'm kind of fascinated with what we kind of look like at the end of the day. And so that's kind of my best guess, and really what I've been watching for. I would note there's really a lot of activity today, in particular on the November next week 18 puts. About the volume today is about 26,000. So that's nothing small. Looks like there might have been a big 19-18 1x2 that went up because there's about 13,000 of the 19s. So that appears to be the biggest trade of the day, and not something that not completely unsurprising. I think someone's making a bet that it's not going to be below 17 by next week, which is, to me, not a huge bridge too far, considering the 17 puts are 2 cents. But someone that's definitely looking for some maybe 70 more cents lower today. That's kind of the biggest trade I've seen on the day. There's also, like you said, some Nove 29, 17.5 puts that have traded for some size that appear to be a customer that was a buyer. Yeah, it looks like they paid 32 cents for about 20,000, and that's been the big driver.
Yeah, this is one of the more active days I can remember seeing in terms of VXX options. So some folks are out there playing. Like I said, the Nove 18 puts are in the crosshairs, whether it's part of that vertical to the upside or maybe rolling out, it seems like, to those Nove 29 17 half puts as well. Either way, the Nove 18 puts doing some paper this week. Know what else is doing some paper here before we get some of your questions here really quickly? Obviously, it's still a big week for earnings volatility. A lot of big names popping off this week. We had Uber, Shake Shack, Marriott, Hertz, Groupon, Chesapeake Energy. Those are just Monday. Then Chesapeake was Tuesday. CVS, Roku, Qualcomm, Fitbit on Wednesday. Let's look at Roku really quickly. That's one's been, talk about just volatile of late. Who'd have thunk a streaming set-top box would be the mecca of equity volatility? Yet it has been. Remember, all those great earnings move and earnings move results reports we got over there for you free of charge. Courtesy of our friends over there at ORATS, theoptionsinsider.com is the place to go. If you clicked on that, you'd see what they're pricing in for Roku. Going into this announcement, Roku was trading, that seems like such a distant memory now, but at the time was trading 146.5. They were pricing in $18 pretty much even. That was actually about half what they've priced in the past. What they've delivered from a move perspective in the past. In the past, they moved almost $36, about 35 and change. So they were pricing in about half of that, and it seems like they pretty much underpriced it because the next day they opened up down to 118. So they sold off quite a bit, looks like about 23 odd handles and change. And now they're kind of living in that same realm, right around 120, almost 121 right now. So that straddle, underpricing it, not as much as the past moves would have perhaps made you assume, but still a decent week here for the premium buyers out here in Roku. Let's see if Disney could follow suit. Disney was after the bell. Disney was pricing in, let's see, at the time of this report, they were 132 3/4. They were pricing in $3.70. In the past, they've delivered about $1 less than that, about $2.70. And right now, let's see, they've moved up about $3.90. So that straddle is almost exactly in line here with what they, of course, on the bell, actually. So they closed at 133, actually. So let's see. Yeah, they closed at 133, and then they gapped up an immediate blush, almost $7. So they actually almost doubled that straddle in the immediate breadth of the move. They've since given about half of that back. So in the immediate blush, if you were buying some premium, you hit that bid really quickly. That seems to be the narrative this cycle is get out of it. If you got long premium, get out of it while the getting's good because you don't have much of a chance to do it. Remember, that's just a couple. There are dozens, if not hundreds of tickers here that they're breaking down. If you have a name you like, chances are they profiled. And we got it for you there free of charge, theoptionsinsider.com. Meanwhile, we don't charge you to answer your questions either. So let's get to some of those with your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's see how many of you guys we can squeeze here onto the program. First up, we've got Current. Current wants to know, do the zero commissions for options also extend to vol products like VIX and spikes? And let me just, I think, clear up a misconception. Obviously, a lot of people have been talking about the zero commissions in the equity space. That's pretty much for your traditional Delta One type products like your stocks and your ETFs, ETPs, that sort of thing. On the options side, I should remind you, there still is a fee. It's much less. There's no ticket charge anymore, but most brokers seem to have settled out around 65 cents a contract. So there still are fees for options, but they're just less than they used to be. So that said, maybe John, this is one that's up your alley. Do you know of, I know they pass along some stuff with VIX quite often because there are other fees associated with that product. Do you know of any brokers out there, or are they tagging any extra fees onto spikes out there, or can you get them all for that standard 65 cents a contract now?
Not sure. I'm not sure as to what those companies are doing. Historically, as you just described, that anytime you make a trade with a product that is proprietary and has a proprietary charge on it, that's just a straight pass-through from when I traded for myself.
Yeah, you think your mileage is going to vary in this one depending on the broker. I know some brokers have historically a little bit of, shall we say, not too much love. Let's put it mildly for the vol space. I think I'm looking at IB. We had a listener actually run for Congress on the platform of trying to get IB to lower their additional fees they tack on for VIX, some exposure fees. A very, shall we say, niche platform. I don't think he won. But some brokers have different relationships with these products. I think the mileage will vary. Check with your broker. I haven't heard of any that are tacking on additional fees for spikes. You might get some for VIX. I haven't heard of any for spikes. Let's see. Eli, Simon, this one looks like it's for you. Eli wants to know, does T3 have any models it can share depicting how a Viking future would look right now versus the traditional VIX futures term structure? I think he's kind of conflating two things. Viking, of course, is hopefully the forthcoming volatility index we've talked about with spikes for quite some time. Hopefully it's called Viking. It's a cool name. That hasn't been cemented, I don't think, yet. So that's separate from the future, that would be cool if it was called the Viking as well. That might be a little confusing. But Simon, what do you have to say here for Eli? I know you guys have these things internally, obviously. Do you have anything you could share with him and our listeners about how these two products are maybe shaping up right now?
Yeah, so with regards to the Viking, which Meatball likes to refer to it as you mentioned, it's a vol index. For the VIX, they use something called the VVIX, and ours is yet to be determined, but let's call it the Viking for the time being.
Which is a great name. Awesome name, by the way.
It is awesome. Yes. But it has to be put to a committee. So, but no, the idea here is that yes, we will absolutely have that index up and running soon. As you mentioned, we calculate it in-house every day, so we have a live stream. And in fact, we're putting that on our website, t3index.com. So if anybody wants to track and see what that is, it will be up there on that website. But in terms of dissemination through MIAX, they're working on that right now. There's just a bit of a technology lift to get that up and running. It doesn't take that long, but probably a little bit after our futures launch, I would say, because obviously that is the key factor. One thing to note is that our index is, I guess, more rational because the variance swap approach is used in case of the VVIX, but that's not quite right because in the case of the vol, the term structure is skewed towards calls, whereas with the SPX, it's skewed towards puts. So we make an adjustment for that. So our our Viking is actually considerably higher than the VVIX, and that is more.
It is
a more accurate reflection.
Yep. I see the Viking, which is mislabeled on your site for some reason, at a price of 108.88 right now, as I'm looking at it, and
right.
This is I'm at T3index.com, and it's a nice resource to look at. Yeah, and so it looks like this is updated as of the 7th. So I don't have the 8th here yet. 1 second, let me get that in. Now it updates to the day before, but yeah, it looks like it closed about 108.88 yesterday. So it is considerably higher, but not entirely surprising given what you had just said.
Exactly.
Now, I see you guys have the milkshake index. So my question is, does that milkshake bring all the tradable WMP products to the yard? And is your milkshake better than theirs? That would be my two main questions.
Yeah, that's yes to both of those. So basically, we partnered with the New Zealand Futures Exchange. They have it's a relatively new product. It's about 3 or 4 years old, so it's a lot newer than the CME complex. But they have options on this whole milk powder thing. So obviously, we can make a vol index. So hence, we went with a bit of a funny twist and called it the milkshake index.
I like it. I like it a lot. Yeah, I know you got all sorts of fun stuff on here. I would suggest to our listeners that are asking things like, what's the implied volatility of Bitcoin? I got a great idea. Why don't you go to T3index.com and check it out? So there's all sorts of great things on here. Again, one that seems to be a little mislabeled, but for the most part, yeah, it's a great site.
You're just angling for that licensing fee for the Viking nomenclature. Yeah, so T3, good place to check out all that. The dairy complex has been very active of late. We were joking about it on our Twifo show. The CME folks don't talk about dairy that often, but it has been moving quite a bit. It hasn't been a big option story for a long time, but that's starting to change a little bit as well. So I'll have to check out this milkshake index. And who was that? Eli, everyone else who wants to know about the actual Spikes futures, of course. Mark mentioned at the top of the show, you can go into the Spikes options and they will show you an implied future level. So you can do some of that homework yourself and kind of create a bit of a term structure if that sort of thing is intriguing you. And as for the Viking, yeah, hopefully we'll get that out there soon. Let's see, we got time for one more here. Lawrence T. I wonder if his friends call him LT. If he's from New York area, they probably do. Let's see. Lawrence T. wants to know, lots of talk in the energy space about how institutional hedging has shifted from the back months to front calendar year for producers. Do we ever envision something similar happening in the volatility space with insurance companies moving from leaps into shorter duration hedges for their vol exposure? Well, a lot to unpack here. Let's start with the first part of this. We were just talking about this on Twifo not too long ago as well, about how in products like WTI and others, the producers of oil, the refiners, all those would usually hedge many years out into the future because that reflected the lifespan of their investments. Now, as that landscape is changing, a lot of those hedging, a lot of that activity has moved into that front calendar year. We have data from the CFTC and from others pretty much backing that up. So that structure, that curve has changed markedly over the past 4 or 5 years as the structure and the scope of the investments out in that shape, in that space, has changed. This is an interesting kind of thought question, Mark, here about this, because obviously he's also referring to, in the second part of his question, what the insurance companies normally do, which is usually hedging on a little bit longer term, shall we say, the back portion of the VIX futures curve. They also play in variance and a bunch of other things. But I think we have seen some evolution of that space, as well as there's been a lot of players playing in nearer duration as well. Would you say we've seen some of that in the vol space as well, Mr. Meatball?
I think, especially in the vol space, the smart paper that really wants vol hedging is not going to go out and buy there are reasons why they would. There are really good reasons to go out and buy April options. But someone that's worried about a near dated, like between now and January crash around something Trump's going to do is not going to get a lot of help from an April 20 call, the way they will from a December or a January call. And that is 100% where, why we've seen some of that. And yeah, oil in particular, especially with OIV being as inexpensive as it is, that's the oil VIX. OIV is really 32, not really that high. OVX, which is USO, around 31. That's, the oil vol just is not really very, very bid at all. Obviously, it can get cheaper, but it for how much oil is moving around, it's not expensive. So what I'd say is when there's been so many people looking to sell premium that some of these vol indexes are, you're almost forced to get up front because the realized vol is outpacing the implied.
Yeah, they certainly have come for it out there in the crude space of late, particularly WTI. Check out TWIFO to learn more about that. Simon, I'll give you the last word on this before we roll on into our most dangerous and difficult segment, the crystal ball. I think we just talked about we have seen some evolution in this space already. So do you concur with that? You think we've seen an evolution of how some of these insurance companies, which traditionally would come out and just bid up all the back for for, years to come, have started maybe evolving their approach a little bit, Simon?
Yeah, I think you have to. I mean, the last few years, frankly, has been very weird, if for want of a better word, in vol space relative to, historical norms. So I think people have to respond. I mean, the vol has been so low that people have had to take different tacks just being involved in, the shorter term trading. And so too, I think that the insurance companies would want to do that as well. I think that makes perfect sense.
And let's see if our vol predictions make perfect sense as we keep on rolling into our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the crystal ball, where we attempt to divine what those ever-capricious volatility gods hold in store for us for the coming week. It's a challenging portion of the show. I'm still looking pretty good. I was looking better at the start of the show. I had another bullseye in my grasp, listeners, which is, of course, within 0.1 away out here. I was that close. I was actually like a tick away on VIX Cash. At the start of the show, we should have just ended it there. I was pretty much 0.01 away. That would have been another bullseye, just like last week in spikes. This week, I'm a paltry 0.24 away. I was at about 12 double. We're at about 12.31 out there in a VIX Cash spikes, holding at about a 1360. Actually, just ticked down a little bit, 1364 or so. So you're about 57 cents away, Mr. Meatball, on the spikes. You're well away on the VIX Cash, so we won't talk about VIX Cash for you. But so it looks like I still win, about 24 cents versus 57 cents. So you were closer this week, though, so well done, getting close. And you know what? I'm going to be charitable because I win a lot here, so I don't need to go first all the time. So I'll let our guest, Mr. Simon, I'll give him pride of place. Mr. Simon, you've been traveling hither and yon, all over there, Australia, Chicago, and back. Hopefully you had a bunch of deep dish and steak while you were here. But all that has prepared you for this moment, sir. It all comes down to the wire here, sir. What are you feeling for this time next week from a spikes and a VIX Cash perspective?
Okay, so the first thing, I just want to make a qualification. The spikes is quite a lot higher. I know we've touched upon this on previous shows, but maybe some people have missed out. Normally, VIX and spikes are extremely close. Now, you'll see that VIX is more than 1 point higher. This is kind of the biggest gap you'll ever see. And that comes because 4 times a year there is a dividend in SPY, which creates a slightly higher volatility, just so that the listeners know why there is a difference. For the most part, they're going to be almost exactly the same, but 4 times a year they differ. My guesses are here. I'm going to go 13 for the VIX next week. And on the basis of that, we're going to lose the dividend, so we're going to lose some of the premium. I'm going to go 13.25 for spikes next week.
I will say I did predict that pregnancy with a dividend premium last week, and it worked out pretty well in my favor. Almost an exact bullseye. I'm sorry, so what was that number again? 13.25, Simon? What'd you say? Simon, give me that prediction one more time so we can get it on the record here.
Oh, sorry. 13 and 13.25 for VIX and spikes, respectively.
Spikes. All right. And now, in order to keep him stewing in his juices, I'm going to go next and let the meatball go last. All right. So, yeah, we have that old pregnant with the dividend spikes. Pretty juicy premium out there right now. That will come in. People are coming for this vol, and we have ostensibly, nothing signed, but ostensibly a deal in the works, and we have a holiday coming up. So all 3 of those things don't bode well for the vol bulls. That's usually maybe where I might want to fade it and go the other way a little bit just to be contrarian, but I'm not feeling a lot of vol love here for the coming week. I'm going to say right about 1230 VIX cash, 1364 in spikes. Dare I say it? Dare I say an 11 handle this week? I am going to say that, I think. Not too much, though. I'm going to say, actually, no, I don't want to go that far. I want to go pretty much close to where we are right now. I'm going to say 12 and a quarter. I'm going to say we get some of that back with a little bit of something happening in the market space. All right, Mr. Meatball. So you got 13 and 13 and a quarter on the upside. You got me down at 12 and a quarter. A nice 1 point wide market. Where are you going to fall, sir?
Well, I would have picked either of yours first. So you guys took both of my ideas.
Got to be more accurate next time, sir. Then you can go first.
Yeah, right. All right. Well, I guess we're about 12 and a quarter. You know what? 11.75. Let's go for it.
I was thinking that way as well before I bumped it up. So you went my second guess there. So there you go, listeners. You got a nice broad market here for vol next week. You got 11.75 on the downside, playing the beer in vol space as usual, Mr. Meatball. Me, nice Goldilocks, 12 and a quarter. And you got Simon playing the former Russell Rhodes seat of buying some vol, 13 in VIX cash and 13 and a quarter for spikes. That music means we've come to the end of an epic journey through the world of volatility. Man, we talked a lot of different stuff today. We talked acquiring Bermuda exchanges. We talked all things VIX and spikes on the options and the futures. We talked the Vikings. We talked VXX. We talked earnings volatility. Even got some of your questions about all sorts of esoteric things going on in the vol space. We wrapped it up with our prognostications. But one more time, let's go back around the horn, see what's cooking. John, let's start with you. Any other exchanges in your crosshairs? Should I be prepared for any other big acquisitions before the next time we talk, sir?
No, I think we're good for the rest of the month. We're good.
Okay, that's good to know. And if folks want to learn more about all things spikes, sir, where should they go? What should they do, John?
Oh, yeah, you can go right to MIAX.com. We have a great site right under, you log in and it's right there under spikes. We have a full encyclopedia of information on both the options and the futures products. And then you can also go into MJX.com and they too have a similar path to the same information.
There you go. MIAX options/spikes is the place to go. You get all that good stuff. You get the quotes, you get the market data, you get a snazzy little 2-minute video explaining what it all is. You even get a link to a cool show called Volatility Views. So what more could you possibly ask for from a volatility-oriented resource? But perhaps you want more. Perhaps you want more esoteric flavors of volatility. Simon, if they are intrigued by such things, where should they go? What should they do, sir?
Well, may as well take my lead from the meatball. T3index.com got a whole bunch of very interesting, well, I think they are, volatility indices. Some a bit obscure, but not so. So take a look.
T3index.com. We love obscurity in the vol space. That's what makes it fun. Check out the milkshake, the bit vol, core spikes, the someday forthcoming Viking, all that good stuff. T3index.com is the place to go. And last but not least, Mr. Meatball, people have questions, and clearly they do, about the volatility space. We only touched on a mere fraction of them today. And maybe they want to ask someone more directly, spend more time. Maybe they want that person to even text them intraday. Where should they go? What should they do, sir?
Yeah, go to optionpit.com, read our blog every day, check out everything we're doing. Andrew's doing a little Edge Hunter webinar next week that's going to be worth your time. Go and check that out. You'll go to optionpit.com and see everything we're doing. And everybody, I want you to email Simon at t3index.com and let him know that Viking is way better than V-Spikes.
Yes. There we go. And that then you can kick over a portion of that licensing fee to me, sir, just for shipping and handling. All right, check it out. Optionpit.com is the place to go. And on behalf of the Greasy Meatball and Simon, John, and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. We love to hear from you. Keep them coming. And we'll see you back here next week for more Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.